The tone has turned less sanguine for Asian markets, as three key developments call into question the strength of the post-vaccine recovery in 2022. First, the US Fed will likely accelerate the timetable for the tapering of monthly bond purchases. This is potentially destabilizing for Asian economies, which are still dependent on ample liquidity to sustain economic recovery. Second, Asian economies are exposed to slower demand from China, which is undergoing a transformation towards common prosperity. Export growth is therefore expected to become contractionary in 2022, reversing the rebound of 25% on average in 2021. And third, Asian markets remain susceptible to the emergence of future COVID-19 variants. This is because over 60% of the world's population inhabits 30% of the Earth's total landmass, implying a higher population density. Moreover, many Asian emerging markets have lower vaccination rates and fewer hospital beds per capita. As a result of these headwinds, we expect that GDP growth in Asia will decline to 4.3% in 2022, down from 6.3% in 2021. Against this backdrop, policymakers will be constrained in their ability to deliver support. Although inflation measured on a GDP-weighted basis remains below its 10-year average, this is largely due to a base effect surrounding meat prices in China. As this base effect begins to phase out in 2022, rising inflation expectations could tilt the balance in favor of rate hikes and policy tightening. Industrialized economies have already embarked in a tightening cycle led by the Bank of Korea. Asian markets with consumption-oriented production structures will seek to keep rates on hold for as long as possible in 2022 to support the nascent economic recovery. The good news is that most Asian markets are well positioned to withstand outflows compared to the last taper tantrum in 2013. Current account surpluses widened in most cases, excluding India and Indonesia, where small structural deficits persist. Moreover, foreign holdings of domestic assets are lower in most markets, excluding Indonesia and Thailand. Although equity valuations remain elevated, most Asian currencies are more competitive in real effective exchange rate terms now compared to 2013.